Hello viewers, welcome to my channel. Hasham Ali Khan here. So now I'm going to start the next problem, 23rd problem on accounts of non-profit organizations. Almost we are at the end of this chapter, accounts of non-profit organizations. 22 problems I have completed in the last videos. Now this and the next video will be the last one on this topic of non-profit organizations. We have seen how to make the income and expenditure account and balance sheet of non-profit organizations. So if you have joined in between, you may not be able to understand. So my suggestion, if you want the complete command on the subject, if you want to get the confidence on this topic, then watch the video from beginning. Don't miss in between, don't skip in between. If you keep continuity of watching all the videos, then only you can be able to become perfect on this topic of non-profit organizations. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel. Select the subject Financial Accounting 2. Select the topic accounts of non-profit organization. Watch the first video, get a good command, then you come to this video. Now I'm going to start 23rd problem. But before starting the problem, I expect my viewers to have a printout of the problems, which I have given in the link under my description. So always keep a hard copy ready before watching the problems. Now 23rd problem. The following is the receipts and payments account of Free Medical Aid Society for the year ended 31st March 2006. So receipts and payments account is given 31st March 2006. Receipts. Cash in hand on 1/4/2005, beginning of the year. The opening cash in hand is 7,000. Subscription received 50,000. Donations 14,500. Interest on investment at 7% for the year 7,000. In this problem, what is the value of investment not given? But interest on investment is at the rate of 7%. And the total interest which is debited here is 7,000. By using this information, we find out what is the value of the investment. How much is the value of the investment? See, when the investment is ₹100, if the investments are rupees 100, then the interest on investment will be 7 rupees because 7%. The interest is at the rate of 7%. So if 100 rupees are the investment, 7 rupees will be the interest. When 7,000 rupees are the interest, on receipts and payments account, you can see 7,000 is the total interest. So when interest on investment is 7,000, how much would be the investment? So 7,000 divided by 7 into 100, you will get 1 lakh. The value of investment is 1 lakh. That is not directly given in the problem. By using this information, we have calculated value of investment 1 lakh. Now charity show proceeds. These are the revenue income. Now expenses, you can see. Payment for medicines, that is a revenue expenditure. Honorarium, revenue expenditure. Salaries, revenue expenditure. Sundry expenses, revenue expenditure. Equipment purchased is a capital expenditure that will go to balance sheet. That will not be taken in income and expenditure account. Charity show expenses, that is revenue expenditure. Now closing cash balance is 4,500. That will be taken in the closing balance sheet. Now additional information. Subscriptions due, that means subscriptions outstanding, beginning of the year, end of the year. So already you know, the end of the year subscription outstanding will be added, last year subscription will be deducted. Similarly, subscription received in advance. The last year subscriptions received in advance will be added and current year subscription received in advance will be deducted. Then stock of medicines. The opening stock of medicine will be added, closing stock of medicine will be deducted. Amount due to medicine supplier. Amount due to medicine supplier. So beginning of the year that will be deducted, end of the year outstanding medical bill is added. Just like the previous problem. Already in the previous two problems we have done the same topic. Then value of equipment. Beginning of the year, end of the year. Value of building, beginning of the year, end of the year. You are required to prepare income and expenditure account for the year ended 31st March 2006 and balance sheet as on the date. Show all your working. First of all, before start preparing this income and expenditure account, we have to find out the capital fund at the beginning of the year. So for finding out capital fund at the beginning of the year, we have to make the balance sheet, opening balance sheet. Now we'll start. Balance sheet as on 1st April 2005, beginning of the year. Opening. Asset side, cash in hand. See the receipts and payments account. Receipts and payment account, first item, left hand side, first item to cash in hand on 1/4/2005, 7,000. 7,000 is the opening cash. So 7,000. Now, additional information is given. In additional information, all from 1/4/2005 values, balances. On 1/4/2005, what are the balances? Subscriptions due, means subscription outstanding, 500. So subscription outstanding, 500. Second one, subscription received in advance, 1,000. Here, subscription received in advance, 1,000. Next, stock of medicines, 10,000. Here I have taken stock of medicine, 10,000. Next, amount due to medicine supplier, that is a liability. Amount due, outstanding for medicine supplier. So amount due to medicine supplier, 8,000, liability. Value of equipment, 21,000. Then building, 40,000, building 40,000. And investment. Investment is not at all given. I told you, by using this interest on investment, we have calculated the value of investment. How much is the investment value? 1 lakh. So investment 1 lakh. Now take the total on the asset side. It is 1,78,500. From 178,500 deduct minus 1,000 minus 8,000, 1,69,500. This is the capital fund balancing figure. That's all. So by making opening balance sheet, we have calculated the capital fund. Now I am coming to income and expenditure account for the year ended 31st March 2006. First I am reading out the income side. The main income is subscriptions. So on receipt side, subscription received is given as 50,000. To this we add outstanding subscription end of the year minus outstanding subscription beginning of the year. So end of the year, how much subscription outstanding? 1,000 added. Minus outstanding subscription last year, 500 deduct. Similarly, the subscription received in advance last year will be added. Current year received in advance will be deducted. As usual, last 2-3 problems I am explaining the same thing regarding subscription. No change at all. Remember the rule. Last year received in advance will be added. So plus subscription received in advance last year added. Less minus subscription received in advance current year deducted. Now ultimately subscription income is 51,000. Apart from the donations, previous 2 problems, specifically it was given in the problem, donations should be capitalized. If that sentence is given, we would have taken donations on the liability side. But here, nothing is given regarding donations. So we assume it's a general donation, so it's a revenue income. So on that basis, on that assumption, I am taking donations on income side. Interest. Interest on investment, that is given in the problem, revenue income 7,000. Charity show proceeds, that is also a revenue income. So income side I have completed. Now I am coming to the expenditure. First expenditure, medicines. The main complication is regarding medicines and subscriptions. If you understood these 2 items, the problem is completely easy. These 2 problems you have to focus, you have to concentrate. Medicines. Payment for medicine is 30,000 given on the payment side. Now to this we add opening stock of medicines and minus closing stock of medicines. Assuming that opening stock of medicines is consumed during the year and end of the year whatever stock is there of medicine that is not consumed. So closing stock is deducted. Opening stock of medicine added, closing stock of medicine deducted. So 25,000. Now closing bills for medicine suppliers. Outstanding medicine bill of the supplier. Closing outstanding bill will be added, opening outstanding bill will be deducted. Closing means at the end of the year, we have purchased the medicine but we have not paid. So it will be added. Whereas the beginning of the year, it means the medicine bill of the last year paid this year, that will be deducted. So add closing bill of medicine supplies added, opening bill of medicine supplies deducted. So ultimately expenditure on medicine is 29,000. Apart from that, the other revenue expenses are honorarium paid, salaries paid, sundry expenses, charity show expenses. All these are the revenue expenditure. Now I am taking depreciation. Specifically, it has not given in the problem regarding depreciation. But by comparing the value of assets at the beginning of the year, end of the year, we can find out the depreciation. Example on building. Building in the problem it is given last year. Last year the value of the building was 40,000 and current year the value of the building is 38,000. The building value has decreased. So how it will be decreased? On account of depreciation. I told you in the previous video also, when an asset decreases, there may be two reasons. The first reason, due to sale, the asset may decrease. Second reason, due to depreciation, the asset may decrease. In our problem, it is not given that the asset is sold. So we have assumed the value of building has decreased because of depreciation. So 40,000 minus 38,000, 2,000 depreciation on building. Equipment. At the beginning of the year, equipment value was 21,000. Here you can see equipment 21,000 last year. And during the current year, equipment purchased, it is given on the payment side. Payment side of the receipts and payments account, equipment purchased 15,000. So if you add up 21 plus 15, it is 36,000. 36,000 is the total equipment. But end of the year, the value of equipment is shown as 30,000. Actually, it should be 36 because last year it is 21, current year purchased 15. So 36 it should be, but it is not 36, it is only 30,000. So remaining 6,000 is the depreciation. 6,000 depreciation. That's all. So we have completed all the revenue incomes and revenue expenditure. Now separately you calculate the total of income and total of expenditure. So you will find here the total of income is more. Income side the total is 82,500. From 82,500 deduct all the debit items, the balancing figure you are getting 6,500. This 6,500 is the surplus or excess of income over expenditure, and this surplus will be added to capital fund in the balance sheet. That's it. Now I am coming to the closing balance sheet. Balance sheet as on 31st March 2006. Liability side, subscription received in advance current year. While making this balance sheet, we'll take the current year, not the previous year. So current year as on 31st March 2006, how much is the subscription received in advance? 500. Similarly, amount due to medicine supplier. Amount due to medicine supplier, that is a liability. Current year you see 12,000. Take it. Now capital fund. The capital fund at the beginning of the year is 1,69,500. Already we have calculated 1,69,500. To this we add the surplus. We got surplus 6,500. Add up 1,76,000 is the capital fund at the end of the year. Liability side completed. Now I am coming to the asset side. Cash in hand. Closing cash in hand is given in the receipts and payments account. Last item, right hand side. So closing cash in hand 4,500. Outstanding subscription at the end of current year 1,000. Stock of medicine at the end of current year 15,000. Then equipment, it is given at the end of the year 30,000. Building at the end of the year 38,000. Investment at the end of the year 1 lakh. Beginning of the year was there investment 1 lakh. End of the year also investment 1 lakh. So we have taken all the assets and liability. Now you have to check whether balance sheet is tallying or not. If we have correctly prepared the final accounts, then definitely the total of the balance sheet will be same. The balance sheet will tally. So here you can find 1,88,500 is the total of liability side. Same 1,88,000 total on the asset side. That means we have done correctly. So this is the end of problem number 23. 23 problems we have completed on non-profit organizations final accounts. Come on. Now see the 24th problem. Dr. Quick commenced his practice on 1st April 2008. So this person, Dr. Quick, is starting his profession on 1st April 2008. His receipts and payments account for the year ended 31st March 2009 was as follows. So first year ends on 31st March 2009. Only 1 year. So receipts, payments. Receipt side to cash introduced. When the owner introduces the cash in the business or in the profession, it is called capital. So capital at the beginning of the year is 40,000. Now visiting fees 20,000, dispensary 2,90,000, miscellaneous receipts 1,000. So these are the receipts. So visiting fee, dispensary receipts and miscellaneous receipts all are revenue receipts. All will come on the income side of income and expenditure account. Now payment side by furniture purchased. So furniture is a capital asset. So purchase of furniture will go to balance sheet. The furniture will not come in income and expenditure account. Then dispensary purchases, salary to compounder, rent, conveyance, lighting. All these are revenue expenditure. Now drawings. The drawing is the amount withdrawn by the owner for personal use. So these drawings will be deducted from capital. It will not be taken in income and expenditure account. Now closing balance of cash 52,400. This will be taken on the balance sheet asset side. Over receipts and payments account I have explained. Now other information. Amount still receivable. Visiting fees 10,000. So already visiting fees received 20,000. 10,000 rupees still receivable, outstanding. So this 10,000 will be added to 20,000. So 20,000 plus 10,000, 30,000 will take it in income and expenditure. And this 10,000 which is still receivable, it will be taken on the asset side of the balance sheet. Similarly for dispensary, amount still receivable for dispensary. So how much is the dispensary receipt? Dispensary receipt is 2,90,000. To that 2,90,000 we add 6,000, 2,96,000. That is the dispensary receipt. And 6,000 which is receivable will be taken on the asset side of the balance sheet. Now second adjustment, amount payable for purchases. Actually how much are the purchases for dispensary? On payment side you can see 1,56,000 is the payment made for purchase of dispensary. Still payable 13,000. So this 13,000 will be added to 1,56,000. And again that 13,000 is the amount payable. So it will be taken on the liabilities side of the balance sheet. Similarly, salary of compounder payable. How much compounder salary paid? You can see it on the payment side, 33,000. 33,000 already paid. Still payable 2,000. So we add 33,000 plus 2,000, 35,000. We'll take it in income and expenditure. And this 2,000 rupees salary payable to compounder will be shown on the liability side. Now conveyance to the extent of 40% is for domestic purpose. That means whatever conveyance are paid, how much conveyance paid? 4,800. So 4,800 are the conveyance amount paid. It is saying that 40% is for domestic, only 60% is for the profession. So only 50% will be debited to expenditure, only 60%. 40% domestic will be added to drawings. Now furniture is to be depreciated 10%. Furniture value 20,000. 20,000 rupees furniture purchased. It is asking you to provide 10% depreciation, 2,000 rupees depreciation. Now prepare income and expenditure account and balance sheet of Dr. Quick from the above. So here Dr. Quick income and expenditure account for the year ended 31st March 2009. Now first I'll take the income. By visiting fees received 20,000. It is given on the receipt side, 20,000 received. And how much is receivable still? 10,000. So total will be 30,000. Dispensary receipts is 2,90,000 given in the problem. And still receivable amount is 6,000. So total 2,96,000. Miscellaneous receipt 1,000 as it is. Take the total of receipt side 3,27,000. Now expenditure. The first expenditure is dispensary purchases. It is given 1,56,000. 1,56,000 is the dispensary purchases. In adjustment, it is saying that still payable for dispensary purchase 13,000. So 13,000 will be added. It will be 1,69,000. Next comes salary of compounder. On payment side, it is given salary of compounder paid 33,000. And adjustment, it is saying 2,000 rupees still payable. So 2,000 will be added. Total 35,000. Again, this 2,000 rupees will be shown on the liabilities side of the balance sheet. Next comes rent, as it is 9,600. Then conveyance. Total conveyance paid is 4,800. But in this 4,800, 40% is domestic. That is not allowed. So 40% of 4,800 is 1,920. Deduct 1,920, 2,880 will be allowed, will be debited. And this 1,920 will be added to drawings in the balance sheet. Lighting, same amount I have taken. Depreciation, 10% of 20,000, 2,000 depreciation. Or, now take the total of the credit side, income side, 3,27,000. From 3,27,000, deduct all debit items. The balancing figure will be 1,05,320. 1,05,320 is the surplus. It is the surplus balancing figure, excess of income over expenditure. That's it. So income and expenditure account completed. Now I am coming to the balance sheet. Balance sheet liability side, capital fund. Dr. Quick started business by investing 40,000. So that 40,000 is the capital fund. Capital. To this we add the surplus earned during the year. Just now we have calculated in income and expenditure account, surplus earned is 1,05,320. Add up, it will be 1,45,320. From this we deduct drawings. Drawings are 72,000. 72,000 rupees are the drawings on the payment side. So I have taken 72,000. Apart from that, the conveyance includes 40% domestic. Conveyance includes 40% domestic. So 40% of 4,800, it comes to 1,920. So 1,920 is deducted, and that 1,920 will be added to drawings. It will be added to drawings. So 73,920 will be the total drawings. Now deduct drawings. 71,400 is the capital at the end of the year. Now two liabilities are there. The liabilities are amount payable for purchases. For purchase of dispensary, 13,000 rupees is the amount payable. And salary payable to the compounder, 2,000 rupees. That's all. So liability side, 86,400. Now come to asset side, cash in hand. In the receipts and payments account, last item, right hand side, by closing balance. So cash balance at the end of the year, 52,400. Furniture purchased 20,000, but depreciation already provided 2,000. 2,000 rupees depreciation, deduct 2,000, 18,000. Now amount receivable. Some amount is receivable on visiting fees and some amount is receivable on dispensary receipts. So visiting fees 10,000 is receivable given in the adjustment. And dispensary receipts receivable amount is 6,000. That's all. Now find the total on the assets and liability side, 86,400, balance sheet tallied. That's all. So this is the end of problem number 24. 24 totally problems I have explained you on non-profit organizations. Each point I have explained in detail. If you want the complete command, don't watch the video once. Watch the video twice, thrice. Then only you can be able to get the full command on this topic of non-profit organizations. So if you are satisfied with my lecture, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. And lastly, don't forget to subscribe my channel if you have not yet subscribed. Inshallah, we'll continue the next topic in the next video.